Hello, this is the Chartprofit webcast, 1 hour into the trading day on Friday 10th of July. Here's the pre-open today. We're looking at the E-mini S&P. Currently I've said that I'm not interested in considering new longs until we see significant buying above this level up here, which is the 10-month point of control at 20.95. At the start of the week I suggested that 20.45 down here as a previous point of control level could provide support this week. 3 times we've seen the E-mini probe below that level, but currently we're up here somewhere, I think. So far so good. We haven't seen any serious time printed below that level, and all the value areas, as you can see, are above that support. So I'm considering that this in fact is valid support, 20.45. And with greater certainty or confidence than previously, it would suggest that price next week, spending time below that level, would be an added weakness. There is a possibility with time around here, which the E-mini is attracted to at the moment, around 20.55. Some more time here, or even up here at 20.73. It is possible that this point of control could migrate down to one of these two levels, and that would have a different look to it as far as the distribution goes. I have said up here, not interested unless we see the E-mini above 20.95, unless and until that point of control migrates. That is a possibility, and there's plenty of time at the moment being spent down around here. Wouldn't necessarily be bearish. It all depends on, as you know, where price sits relative to that level after it's migrated. But very often when that happens, you'll see a move in the market. Currently bulls would hope that this level holds, and we see price heading higher with buying marked. You'd also want to see the breadth numbers pick up. Currently they are well below 50, not quite oversold. We've got 26% New York. This is the percentage stocks greater than their 50-day moving average. 35% for NASDAQ, 38% for the Russell. Definitely want to see those pick up. Let's look at the pulse chart. Looks like this. So you can see breadth here, which is red. We need that back to green. And the price oscillator or momentum is heading down, and it's negative. So these two technicals here could definitely still see some improvement. We can see that from over here, post that point, which was early June, we've seen a deterioration in all of this. This is my simple kind of template for the technicals. Lots of information on one chart. You can see on the top here we've seen no significant buying apart from this point here, that green, which was back over here on the 16th of June. There was the first aggressive selling, followed here, just a little test here, but no buying across this range where the E-mini currently finds itself quite comfortable. So this is the likeliest place that the point of control would migrate to. It makes sense to me, 20.55 if that happens, but we'll see. I'm going to move pretty swiftly through the chart. So this is the spider, the S&P ETF, weak price location here below its 12-month point of control. 124.50, 7-month point of control on the Russell 2000 ETF, IWM. Again, we're still below that level in weak price location. And the diamonds, the Dow Jones ETF, the level there is 180, which is the 12-month. Recently talked about the financial sector, XLF, and this level, 24.25 major, and this week we have seen that probed. Not a lot of time spent below that level. I think this is relatively a strong chart, and currently it's one of the few that's sitting above its local point of control in a strong price location. This would be a chart to follow, to monitor. As a key chart, price back below here would certainly confirm weakness. Europe being focus at the moment. We looked at some of the charts last week. This is the DAX, the German DAX chart. On current news heading towards the weekend meeting, we're seeing a rally in Europe. So the DAX is up. The level Here is the 12-month point of control at 11,440, very close to the halfway point off the April high. We talked about these levels last week, so this would be the obvious resistance, the halfway retracement off a high, always an important level, but it happens to be the 12-month point of control. We could see this. Alternatively, if we see some good news coming out of Europe, we could see perhaps a gap above it and then some consolidation. If it holds above there, that would put this chart back in a strong position. French index would need to do a little more work to get back above 50.40, which is its important level here. UK's FTSE 100 future we're looking at here, 65.20. I'm watching this level as a major point of control with some degree of interest. If we can see FTSE future holding above 65.20, it's in a stronger price location. The index itself, the FTSE 100 index itself, its level is 65.60. I'm just a little less certain about that level as I am on the futures. There is a level up here on the FTSE which is very close to this point of control in terms of time, but on the futures chart just happens to be much clearer. We should look at the sentiment indicators. Today I wrote that my version of the RIDEX assets ratio was lower at 8.69, and that is an 8-month low. That's interesting. Here's the chart itself, the RIDEX assets ratio at the bottom here, and here's that 8-month low, and we've just taken it out here. So currently RIDEX traders are more bearish subject to this indicator than they've been since October. Last week we talked about, as the market fell, this ratio was actually rising, which wasn't ideal, as I mentioned. So this is a little more like it. The bear fund assets that I follow, summated here on the bottom chart, bear fund assets heading higher this month, and here's the highest level this year, and good if we saw this kind of spike in the bear funds from the bullish point of view. And the reason the ratio itself hit an 8-month low is that's what the bull fund assets that I follow have actually done just about, but that's what they've done, as you can see here. This week in the public poll from AAII, the bulls percent was actually higher at 27.9, but 4 weeks ago bulls percentage reached 20%, which was a 2-year low. Bears percent this week was lower at 29.2, but last week's 35.1, that was the high since August last year. So the public here, in what they're saying rather than they're doing, never as reliable. But if we look here at the 4-week moving average of the net, the bulls minus the bears, so this yellow line being the average, that is actually below zero. And if you remember last webcast, we talked about it was down at -5, and that was actually a 2-year low at that point. So there are plenty of bears in this indicator. Here's the investors' intelligence this week. Bulls percentage lower, 44.8. That's the lowest since October. Bears percent was slightly higher at 15.6. 3 weeks ago, though, it hit 16.5, and that was the highest since January. If we look at the 4-week moving average of net, 32.12, which is this yellow line again, that is the lowest since back over here last October. We've seen some bears emerging in the exposure index, which is the measurement of active money managers' current equity exposure. Current number is at 54.99, almost the same as last week's, which was the lowest reading again since October. Currently in a heavily news-influenced, event-driven market. If there wasn't something so obvious as Greek situation and possibly China currently frightening investors, i.e. more of a normal market if there is such a thing, these numbers would be extremely interesting from a contrarian perspective. In other words, looking quite bullish. Okay, but Lipper US fund flows tell us this week that the equity fund, including ETF inflows, were 14.1 billion this week to the 8th of July. That's the largest single weekly inflow this year. That's the red histogram on the right here, the red bar. Not dramatically high, but the highest for a while, and it's slightly lifting our 4-week flow up around 8 billion here. It's kind of a neutral reading, I think. Okay, let us look at supporting charts. This is the T-bond ETF, TLT, the level that we've been watching for a good while now. At 117.14 is the major point of control here. Recently we've been oscillating around that level well, let's say the worrying aspect is in a market which is potentially finding a low, you tend to see a very brief test, and then the rest of the time we spend consolidating above it, and then we see the market moving, starting to progress higher again. What's happened here is more of a kind of an oscillating kind of situation around that level, and that does worry me a little bit with regards to bonds. Price below that level where we currently see TLT is weak price location. Okay, looking here at the 10-year Treasury Note Index, TNX, and if we just zoom out here and see where this has come from, basically it's come from there over the last good few years. Possibility that we're right now kind of stabilizing, basing on this chart. So the first thing we do is off this important low here in 2012 to the subsequent high, we always look at this halfway point. There's a possibility here that we are maneuvering into a position of strength on this chart. The point of control of importance, what I call the local point of control, the most important level is down here. We've seen that tested a couple of times, but this now is just looks, I just get the feeling this chart is moving into a strong position. So let's see what the 7 to 10 year ETF chart, which is IEF, we're looking at it here, and the big level is 105. This obviously looks like an inverse of the previous chart I just showed you. This level here at 105 is the major point of control, and I've given myself a note on this chart which is price below this level is weak, and actually I could have made that very weak. So if we see more time being spent below this level, that would kind of increase my idea that this is a really weak chart. Just zooming out there, and unless we see some signs of strength forthcoming, this could be a really interesting chart. The chartists might see this kind of pattern up here as a kind of reversal pattern. I can skip through the commodities pretty quickly. They still look very, very weak to me. I'm not tempted at all to look at the long side of these charts. Did say we'd probably see a test at some point of these ETFs, of the lows, sorry, previous two lows. It's just looking really weak. I have said previously on a number of occasions that the silver chart, SLV, looks even weaker, and again we'd probably see this testing that actually happened this week. So a little bit of a recovery the last couple of days, but I think just the price action, again, I just need to see something. Don't see any sign of strength. First test they get up here, it's kind of a failure, so more downside I think. And oil as well. This is USO, the oil ETF, and we saw this low in March, and then followed by this high here in May. So the halfway point comes in here. The interesting bit was when the 16-month migrated up to this level, did it over here somewhere, and then we saw price action underneath it, which was, we said, a weak pattern. So we come swiftly lower, and this is the level here, this halfway point just above 18, actually at 18.55, half range off the March low. This is now resistance. Makes sense to look at the Aussie dollar. We just looked at gold, and talking of weak charts, we're looking here at the major point of control at spot 76, and we've seen the support provided, and when you see this proven support, it often means that when you see a break, you see weakness pretty swiftly. So we're seeing the Aussie dollar lower here, and I did say that I think should that level be broken, this would be a particularly weak looking chart. I wouldn't be interested in this long side at all. Minimum got to recover back above spot 76 for me. Okay, that makes sense. Next to look at the dollar index, 96.76 here, that's the half range off the March high, and this is the obvious resistance which was probed this week. That is exactly here, and that's kind of a failure. So that's the first level to watch on this chart, as I said last week, price back above and showing, especially like an obvious higher low, would be strength. So I'm not totally convinced about this chart. The 12-month comes in here, and we're currently sitting above that. So longer term, strong price location. Short term, in my way of looking at things, weak price location. So we either see price here weak, or we see price up here strong. Currently, not convinced. British pound made an attempt above the major half level here, which is a level which turned it back down from that test, back down below the 12-month point of control. So still weak price location for this chart. Dollar yen chart, 12-month point of control at 119.64, just about here, and when that migrated up to that level from about here, the 12-month, we then saw the chart push higher. It's obviously corrected from there, but we're holding in a strong price location still above that level. So there is talk recently of strength coming into the Japan, the yen, a lot of people making a thing about that. But these two levels, especially this one here, are the ones to watch, 117.68. Until price in the longer term gets back down here, I'd say this is still a strong chart. So still strong, I'd say. And finally, in this week's roundup of the charts, looking at the Euro FX, 113.40 is the 12-month, and so far at least the chart has tried but failed to print any time above that level. So we're still in a situation here where there's no, again, what I would call longer term strength. I'd see that if we get this kind of price action, might then see or project a rally up to this kind of level, the major. Currently a long term still in a weak price location. If we look at the halfway off the low, which we always do, there's the halfway point, and we're just finding a little bit of support there. So again, this chart could move either way. We need to wait for a clue. So price below here would be weak, and you would expect a retest. Price above this level, especially a sort of higher low, would suggest a test of this. Currently, not sure. Okay, that concludes. Once again, I wish you a good weekend, and thank you for watching.